the reason why the euro has rallied in the last few weeks was just a massive short positioning squeeze. When euro was down at 105, positioning was the most stretched ever in terms of short positions. I think we've seen that position come off. Positioning is a lot cleaner now. And I think the interesting thing will be if we do get a positive resolution this week around Greece, that will actually be euro negative, because now I think speculative community will be quite keen to start selling euros again now that the powder is a lot drier. And because a Greek resolution means that the ECB will continue to print money, interest rates are still negative in the eurozone well into next year. So euro will come back as a good funding currency.
Worst case, no deal, Greece defaults on the IMF payments due on Tuesday, euro gets trashed?
It seems quite ironic that in either scenario it seems to be negative for the euro. I think in the case of a default, it also depends on whether or not Greece is able to still remain in the eurozone. So it's not a clear sort of binary outcome, it seems, because I think there are certainly further elements that could play out still. But worst case scenario is default and they get kicked out of the eurozone. And then I think we might really start to see volatility in the market, in which case I think euro will go down. But we might see a risk-off environment, in which case I think yen will probably benefit on the back of that.
Dollar, composite and services PMI out tonight. Fed's Jerome Powell speaks again. Are they going to move the greenback?
Certainly, if the data continues to print on the strong side, my view is I think the US economy is on a phase that continues to recover. I think the Fed is still on track to hike in September. And currency markets are quite reactive to the economic data, which is rightly so. So I think if we continue to see evidence that the US economy is rebounding from the soft Q1, that is certainly very much dollar supportive in my view.